What's going on, everybody? This is Tim from Trending Money 2020, and today's going to be kind of a very simple video. I'm getting a ton of questions in our inbox recently about what is the anatomy of a breakout. Anyone can just draw something on a chart and say, oh, it's breaking out, but what are you fundamentally trying to break down in real time, which is the most important key, and trying to understand that. How are you adding layers of confidence or confluence rather to a trade? What are you looking at? That's what we're going to talk about in this video. Let's just go ahead and get right into it. The first thing we need to do here is kind of establish some boundaries. We need to establish a couple of pivots or swing highs. Basically what I'm looking for is an inflection point, okay? And my philosophy is if there's more eyes on this inflection point or this pivot or this swing high or swing low, the more people are looking at it, the more obvious it is, the more people are looking at it, which is what we want, okay? That means it's a more established level in the market. All right, so off the bat, I am looking at here, and I'm looking at here. This level as well is interesting. This level as well is also interesting. Okay, so initially, if you take these bubbles, these little UFOs that I have on this chart, if you start drawing trend lines to connect these, this is looking like a downward channel, right? Another thing you could do is just draw a parallel and draw it here, right? So in all, if you look at how price is behaving, this tells me that we're in a downward channel, and I could possibly expect it to move lower, except one major thing. The major key here, and this is what I look for first after, or this is what I look for second after drawing a channel like this, is there is a failed low. Okay, so this level right here, I'm going to go ahead and draw this on the chart. Type this out. Failed low. All right, we'll even draw a little indicator, little up arrow, so you know which one I'm talking about here. All right, so this level failed to communicate to us, people who are looking that, we were under the expectation that price was going to move downward from here, except it failed. This is very, very important. And what it tells me is that, the fundamentals behind the market, supply and demand, or, buyers and sellers, it's changing, right? So another thing, the third thing that is very, very interesting to me is this bar right here. I'm going to paint it on the vertical line, and we'll make this transparent so you can kind of see. Okay. This bar right here closed as a buyer's bar. Well, it's a buyer's little market. All right. And this is price action to me. But this bar closed very close to the high of its range, or the top of its range. And it closed on the buy side. That tells me that after a failed low and a next bar, that I shouldn't be shorting this. So I know there's a lot of trend line people looking to short this next trend line. I'm just telling you what I see happening if I'm looking for a particular setup, like a breakout. So this is sort of the anatomy of it all. Right, so now that this failed low has happened, we've had this buyer's close, that tells me that this is a new direction, potentially. Where am I going to get on this action? Well, if price starts to break out here, then I know, something's really going on. So I'm actually going to have a buy stop order sitting at the market right here. Not a limit, because you'll get filled lower, and that you don't want to, breakouts are, if you're anticipating a level to be broken out, you don't want to be using limit orders or anything like that. You want to be using a regular buy stop order. Okay, so which, by the way, just effectively fills your order as a market order. So it's at market. So what I'm looking to do is have that buy order ready. And the second it's triggered, the second it's in, I want to place a stop loss. Now, before we get into that, I want to talk about, another thing that we could be looking at to kind of add some conviction to this trade, or a little bit more confluence. And one of the tools that we use is an indicator, which is just basically the MACD. I'm going to turn this on, and we're going to take a look at momentum and which way that's heading as well. If you can add more layers of security to a trade like this, the better off you're going to be, because the chances of success are a little bit more higher. So I like to see that this bar is closing above, it's making new momentum in an upward direction. We use that as a tool, quite often. You'll see it in a lot of our charts on our Instagram. Right. So now that we know that momentum is moving upwards, it just adds even more conviction that when this bar breaks out, we're shifting upwards. We had the failed low. We're breaking out of this trend line. We had the buyers come in. Now we need to talk about trade location. So trade location being where our entry is and where our stop loss is. All right. So we know where our entry is. Now let's talk about where we place our stop loss. One of the big reasons why I got into this trade in the first place was because we had a ton of buyers come in. If those buyers get ousted, then I know that I'm on the wrong side of the market. And that's on the law of supply and demand, really. At the end of the day are there more buyers or are there more sellers? And who had the last bar and reacting to that in real time. So my initial stop loss, and this could be different for every single person, my initial stop loss is going to be at the bottom of this bar. This bar is, like I was saying before, it closed at the high of its range, at the very top of its range. Not at the very top, but it closed very, very high. If for some reason this bar is knocked out, it's making a new low beneath this bar, you've got a pretty strong indicator in price action that things aren't playing out the way you thought it was going to play out. We've entered here. We have an initial stop loss here. This stop is actually going to trail as price moves higher. And we're going to talk about profit target as well. But as price begins to move higher, this stop is going to go here, or it's going to go here. So it doesn't, that's just trade management, and that comes in with, from you. I can't tell you exactly where to put it, but I can tell you the initial place you want to put your stop loss is the place where you thought for sure that there was enough buyers to lift the market from here. And for me, in this trade, that level was right here. All right, so another thing you can remember is prices moving higher. That's all fine and dandy. But one thing that has kept me afloat all this time in this trading experience is if I can move my stop up to at least break even, then I know that no matter what happens here, the worst case scenario, I lose a commission. And that has been kind of the biggest thing every single time. And if you take anything away from this video, take that away, is don't try to trail your stop. Go for an actual profit target on a chart, and we'll talk about that in a sec. But just try to move your stop loss to where it's break even. That way you're not capping your down or your gain potential, but you are capping the potential for you to lose any money at all. Maybe move your stop into $1 or $2, and then let the rest of the profits run into a profit target. So profit target, what do we look for in a profit target? Well, this whole channel is now a lie. This whole channel, and let me get rid of this so we can see, this whole channel is now it's been proven wrong. We're long in this position. We've moved our stop up to where, worst case scenario, we make a few dollars, but we don't lose any money. That's super, super important in a way to manage your risk over time. We need to find a profit target. Well, since this was the start, okay, we'll highlight this. Beginning of channel. Since this was the beginning of the channel, this level right here, you guys know what I'm pointing at, but I want to make sure that, want to make sure that you guys see exactly what I'm talking about. Here we go. All right, the beginning of the channel. I fully expect price to retrace to this level. Okay, so I'm going to highlight this as blue or whatever. When you are in a reversal and you start to build a channel in real time like this, and it doesn't work out, these are usually the best profit targets for an initial profit target. Now, mind you, I understand we have a ton of stuff going on with the Federal Reserve and all of that talk and everything. But this beginning of a channel is going to be the most raw price target that you can hit, because it's the last known level of the beginning of what you thought was going to happen that didn't play out, right? So ultimately, this is going to be our first profit target. Maybe you can go for a second because we get another leg up. Typically, there's a pullback. The pullback being in this level right here. We're not going to talk about that trade. It's a really good one, but we're not going to talk about it in this video. It's a whole nother video. But the beginning of this channel, this falsehood, this narrative that was forming is no longer true. So the story is now that we're going to retrace back to that level at least. So in this scenario, at the very best, you've made 100 plus pips. And at the very worst, you've broken even, or you break even and you make a couple bucks. Maybe you make $10 or whatever. And then you just traded this whole reversal. And that's the anatomy of a breakout. That's what we look for every single time. We're looking for this channel. We have no intention of trading the channel, period. We're just looking for when the right scenario in the channel starts to paint the picture of, hey, a breakout is happening. Okay, we look for that failed low. We look for those buyers, that buyer sentiment to come into the market. We look for that last level, this last swing high. We look for this level to be broken out. We have our buy stop ready. We know that as price moves up, let's make sure that at the worst case scenario, we don't lose anything but the commission or the spread or whatever your trading mechanics are. And then we look for price to retrace back to the beginning of that channel. That's what we look for in a breakout every single time. That's our formula. That's been our formula for the past 20 years. And it's not just a formula we apply in this market. It's also a formula that our automated trading system applies every single time as well. So yeah, I'm going to go try to figure out what's going on in this market. We have had a massive retracement down. And that's the end of this video. Thank you for watching. If you have any questions, definitely hit us up. And we'll be sure to help you as best we can. Again, my name is Tim from Trending Money 2020, and have a good day.